Hi everyone, my name is Modest. In today's video, I'll be teaching us how to compute assessable profits for a business that changed its accounting date. Okay, so we're going to take this illustration, right? Illustration 1 says Day by Day Limited is in Akure, Ondo State. The company had hitherto prepared its account to 30th June, but decided to prepare its account to 31st December. The following results were extracted from its books. Year ended 30th June 2001, we have 150k. Year ended 30th June 2002, we have 300k. We have period to 31st December 2003, we have 875,000. We have year ended 31st December 2004, we have 825,000. And we have year ended 31st December 2005, 42,000. Required: compute the company's assessable profit for all the relevant years. All right, so when you see a question like this, the first thing to do is to help you prepare to prepare a working guide for yourself. All right, it can be solved without a working guide. However, a working guide will just guide you, as the name implies. It will just keep you on track. It will guide you against any material error that could be performed without using the working guide. So to do the working guide, I'll just do YOA, I'll write it, then basis period, then number of months, then profits. Okay, so this is just like bringing what they have given us in the question with just little or no adjustment. All right, so the first thing to bring here is the what? Is the year ended that were given to us. You bring all the year ended. The first one is 30th 6 2001. The next one is 30th 6 2002. The next one is 31st December 2003. The next one is 31st December 2004. The next one is 31st December 2005. Okay, so now the next thing to do is to now identify the beginning of the period. Okay, so from the very first one, we are going to count 12 months backwards. So if I count 12 months backwards from this, all I need to do is to pick the first day of the month. I add 1 to the month, it will give me 7. Then I subtract 1 from the year, it will give me 2000 and 2000. Okay, so now that is just for the first one. Now for the second year end, we are going to continue from the last year end. So if the last year end was 30th June 2001, all right, the next date would be what? 1st of the next month, which is July 2001. Okay, so the next day after this year end should be what? 1st of July 2002. The next day after the end of this year is 1st of January 2004. Are we together? And the next day after the last year end is 1/1/2005. So we have been able to arrive at the beginning and the year end. All right, so the next thing to do is to now look for the year of assessment. This working guide is being prepared on preceding year basis. So we are going to say 2001, all right, is a preceding year of what year? Is a preceding year of 2002. So 2002 is the year of assessment. That is, the account that ended in 2001, June 2001, would be assessed to tax in 2002. All right, so what is the preceding? 2002 is a preceding year of what year? Right, is a preceding year of 2003. Okay, 2003 is a preceding year of what? 2004. 2004 is a preceding year of what? 2005. And 2005 is a preceding year of what? 2006. So as it is, we are now going to count the number of months that is in this basis period here. Okay, so for the first basis period, that gives us an exactly 12 months. For the second basis period, it gives us exactly 12 months. For the third basis period, right, so this gives us 12. This is from 7 to June next year. That is 12 months. So if we now count another 6 months to December, that will give us what? 18 months. All right, are we together? So the next basis period is from January 2004 to December 2004. That's exactly 12 months. And the last one is also exactly what? 12 months. So after doing this, you just bring down what was given to us in the what? In the question as regards the profit. So in the question, what was given to us? They gave us some adjusted profit. For the first year, they gave us 150,000. So you just bring it down here, exactly the way it is. Then you bring 300,000. You bring 875,000. You bring 825,000. And you bring 42,000. Now, this is the working guide. The working guide is ready. Now, the next thing to do is to identify our year of change. Our year of change. All right. We have explained year of change, how to get your year of change in a previous video. So, if you need more clarity to that, you can watch our earlier videos on this. Okay. So now, to identify the year of change in this question, remember that the year of change is that year in which the taxpayer did not make up or prepare account up to the last year end. So we are going to look at it. And when you want to get your year of change, you don't come to the year of assessment. Don't stress yourself. Just come to the year end. That is from where we are going to get the year of change. So the year of change, I say again, is that year which the taxpayer did not make up its account up to the last year end. So this is the first year end. That's 30th June 2001. All right. So the next year end should be what? 30th June 2002. This is correct. The next year end should be what? 30th June 2003. However, it's changed to what? 31st December 2003. So from this question, the year of change is 2003. The year of change is what? Is 2003, because it is in this 2003 that the taxpayer did not make up its account up to the last year end. So it is 2003. Right? So 2003 is the year of change. So now, having known the year of change, now we are now going to use it to compute assessable profit for. What is the meaning of this one now? Alright, so now that we have gotten the year of change, the next thing to do is we are going to use this year of change to compute the assessable profits. Alright, we are going to compute it for the old year end and the new year end. Alright, so let us go and compute. So the question now is solution. The name of the company is what? Day by day. Got it. Okay. Alright, so now that we have gotten the year of change, what we need to do is to compute the assessable profits for the relevant years. First, we are going to use the old accounting date, and we are doing that on preceding year basis. So I'm going to write year of assessment, basis period, then assessable profit. Sorry, let me make this assessable profit. Okay, so the year of change now forms the first year of assessment. So we are going to say the first year of assessment is 2003. All right, so now that we have known the first year of assessment, the next thing that we need to do is to say what is the preceding year of 2003. The preceding year is the year before 2003, and that is what 2002. And what is the last accounting year end? That was June. All right, so that was 30th of June 2002. So after doing this, we will now count 12 months backward. So to count 12 months backward, remember that we'll just bring the beginning of the months. We'll add 1 to the months here, which is 7. All right, and this will be what? 2001. Okay, so after doing this, we have achieved the basis period. So the next thing is we need to go and look for where can we find this basis period in the working guide. All right, where can we find this basis period in the working guide? So 1/7/2001, all right, to 30th June 2002. I can find 1/7/2001 here, all right, to 30th June 2002, exactly 12 months. Okay, so I'm just going to pick the whole of 300,000. Okay, because they're exactly 12 months and this is 12 months. So I'll pick 300,000 and write it here as the assessable profit for that year of assessment. So the next year of assessment should be what? 2004. 2004. Remember that we are doing on preceding year basis. So what is the preceding year of 2004? You are now going to say 2003, because 2003 is a year before 2004. What is the old accounts year end? They usually made use of 6th June, which is 6th. All right, so 30th June 2003. What to do now is to do what? Is to count 12 months backward. All right, which is 1/7/2002. If you compare, you will see that it is a continuation from this last year end, which is 1/7/2002. Now that we have seen 1/7/2002 to 30th June 2003, we are going to say where can we find this working guide, this basis period in the working guide. So 1/7/2002, I can find 1/7/2002 here, and I can also see 30th June 2003. June is in this basis period. This ends in December, while we are looking for June. This is 18 months. However, what we are looking for here is how many months? Is 12 months. This is 12 months. This is 12 months. So because this is 18 months and this is 12 months, I'm going to take 12 out of 18. That will give me 12 over 18 times 875,000. That will give us the basis period. That will give us the assessable profit, all right, for this year of assessment. So that will give me 12 over 18 times 875,000. That's 583,333.33. Okay, so that is that. The next year of assessment is 2005. 2005. The preceding year of 2005 is what? Is 2004. So you bring it here first. What was the old accounting year end? 30th June. Okay, so it is either we continue from here or we count 12 months backward. So if we continue from the last year end, that will give us 1/7/2003, which is still 12 months backward from this. All right, so we are now going to say where can we find this basis period in the working guide? 1/7/2003. 1/7/2003 can be found here. All right, this is 12 months, don't forget. Sorry, let me just, this is 12 months, right? So but we can see 1/7/2003 to 31st December 2003. Remember, we are going to 2004. However, we could see this number of months in this working guide here. All right, so this is from July to December. That will give us July, August, September, October, November, December. That's 6 months. However, how many months do we have here? We have 18 months. So we are going to take 6 months out of 18 months times 875,000. All right, so if we do 6 divided by 18 times 875,000, that will give us 291,667. Okay, so we have not gotten to 30th June 2004. So we are going to continue from the last date that we could see. So the next day will now be what? 1/1/2004, which is the next day. This is 2003. 1/1/2004. To where are we going to precisely? 30th June 2004. 30th June 2004. So we are now going to say, where can we find 1/1/2004 to this date in the working guide? We can see 1st of January 2004 here, okay, and it ends at December 2004. This is 12 months, but we are looking for how many months? We are looking for 6 months. So we are going to say 6/12 times the basis, the adjusted profit here. That's times 825,000. So that's half of it, right? So if we do 6/12, that's 6 divided by 12 times 825,000. That will give us 412,500. So the assessable profit for this year of assessment is the addition of this and this. So if we add it up, that will give us 704. 704,167. So I'm now going to add up the total that I have. I'm going to add up the first assessable profit, the second, and the third. So 704,167 plus 300,000 plus 583,333.33. That will give me 1,587,500.33. So that is how to compute the assessable profit for the old accounting dates. I hope you understand. So after we have done this, we are also going to compute the assessable profits for the new accounting dates. We are still going to start from the year of change. Do you understand? We are still going to start from the year of change. So for now, let's just take a break. If you have any question concerning this, you can ask me, or you drop it at the comment section. I will attend to it. So that's for that. Watch out the next video for the second solution. Alright, so that is the process involved in computing assessable profit for a business that change its accounting dates. Alright, so but if you are still finding it difficult to identify the year of change, please, identifying the year of change is very, very important, because if you cannot identify the year of change, it means every other computation is wrong. If you cannot identify your year of change, every of your computation would be what? Would be wrong. So we advise you to go and watch our earlier video on identifying the year of change, how to identify the year of change. We still have one more illustration, alright, on the computation of assessable profits. Okay, so for now, this would be all for this session. Alright, so all you just need to do is to please subscribe, like, and share so that you don't miss out on subsequent videos. Okay, thank you so much, and thank you for watching. God bless you. Now we are still going to compute the assessable profit for the relevant years using the new accounting date. Remember that we have been able to identify the year of change, and the year of change is 2003. Alright, so this year of change would form the first year of assessment. So we have year of assessment, basis period, assessable profits. The computation is based on preceding year basis. So what I mean by preceding year basis simply means that, okay, the account for a particular year will be assessed to tax in the following year. Alright, so the first year of assessment is 2003. So according to preceding year basis, this simply means that we would be assessing the tax of what? 2002. Okay, so what is the new account year end? They change it to what? To December. So that will give me 31st December. Are we together? Now I'm going to count 12 months backward. So if I'm counting 12 months backward, that will be the beginning of government fiscal year, which is 1/1/2002. This is exactly 12 months. Okay, so I'm going to say, where can I find this basis period in the working guide? So can I find it here? No. 1/1/2002 is not here. 2002 can be found here. Alright, so we can find 1st of January 2002 here. However, remember that this is 12 months. Okay, but we can just see 1/1/2002 to 30th June 2002. 30th June 2002, which is what? Which is 6 months. But how many months do we have in this line that we got it? 12 months. We are going to take 6 months out of this 12 months. So that will give me 6/12 times 300,000. 6/12, that's exactly what? 150,000, because it's half of it. Are we together? Remember that we have not gotten to where we are actually going to. So we are going to continue from the last year end that we saw. So the next day from this will be what? 1/7/2002 to where we are actually going to 31st December 2002. Right? Which is 6 months. So we are going to say, where can we find 1/7? Where can we find this basis period on the working guide? 1/7/2002 can be found here. Alright, to 31st December 2002, everything can be found here. However, how many months do we have here? We have 18 months. How many months are we looking for? 6 months. So we are going to say 6/18 times the adjusted profit here, times 875,000. That will give us what? 6 divided by 18 times 875,000. That's 291,666.67. Alright, so I'm going to add up this and this to give me the assessable profit for this year of assessment. So if I add it up plus 150,000, that will give me 441,666.67. Alright, so that's for the first year of assessment. For the second year of assessment, which is what? 2004. For the second year of assessment, which is what? 2004. I'm going to use preceding year basis. Alright, so what is the preceding year of 2004? Remember, preceding year is the year before the year of assessment. Alright, so the preceding year of 2004 is what? Is 2003. So that's 2003. What is the new year end that the business changed its date to? 31st December. So I'm going to do what? I'm going to count 12 months backward. And to count 12 months backward, I'll just say 1st of January 2003, because this is already in December. Alright, this is already in December, so you don't need to add 1 month to this like I was explaining the other one, because this has gotten to the last month of the year. So you just need to start from the beginning, all right, which is January. Okay, so now we are now going to say, where can we find this basis period in the working guide? 1/1/2003. Where can we find 2003 first? 2003 can be found here. So 1/1/2003 can be found here. We have how many months here? We have 12 months. But how many months can we find here? 18 months. So we are going to take 12 out of 18. So we'll say 12 over 18 times the adjusted profits here, 875,000. Okay, that will give us 12 over 18 times 875,000. That will give me 583,333.33. All right, so the next year of assessment will be what? Will be 2005. Okay, 2005. What is the preceding year of 2005? The preceding year of 2005 is 2004. What is the new account date? 31st December. So what do? I'm going to do what? Count 12 months backward. So what is the 12 month backward of this? 1st of January 2004. Okay, so the next line of action is, where can I find this basis period? 1/1/2004. All right, on the working guide. 2004, I can find it here, 1/1/2004 to 31st December 2004. All right, and that's exactly 12 months, and we are looking for 12 months. So I'm just going to pick the whole of these adjusted profits as the assessable profits. So I'm going to pick it as 825,000 as the assessable profits. So having done that, I'm just going to add up everything that I have. Okay, I'm going to add up 585 plus 441,666.67 plus 825,000. Let me add it again. 441,666.67 plus 583,333.33 plus 825,000. That will give us 1,850,000. All right, so that is how to compute the assessable profits. Okay, so let me just summarize what we did again. So the first thing is we prepared our working guide, which is this. The next thing is we identified our year of change, okay, which is 2003, and after which we used the year of change to prepare or compute the assessable profit for the old accounting dates. Okay, when we computed it for the first year of assessment, we computed for 2 subsequent years, 2003, 2004, and 2005. We did that for the old accounting date, and we did that for the new accounting date. Now, having done that, it is in the place of the relevant tax authority to choose which of the assessments, all right, it wants to choose or make use of. In most cases, they choose the one that will generate a higher tax liability, because they didn't tell the businessman to go and change the accounting date, right? Okay, so in changing accounting date, it is the tax authority that has the right to choose either from the old assessment or the revised assessment, which is the new accounting date.